Hey, what's up everyone? This is Kirk here again at optionalpha.com, where we show you how to make smarter trades. And in today's video, we are going to show you how to enter a call credit spread order inside the thinkorswim platform, aka a bear call spread. Some people call it a bear call spread. I call it a call credit spread just because it's a little bit easier for me to understand it that way. So again, the purpose of this video is just to show you the logistics of how to do it. So actually how to get the order in, what strike prices to select, and how to get the order placed. So not necessarily pricing or anything like that. So just follow along as we get through this video. So inside of our thinkorswim platform, again, we're going to be inside of the trade tab, and then under all products, you're going to type in the ticker symbol of whatever security you're trading, in this case, SPY. And then you're going to choose the contract month. Now, in this case, we're just doing the April contracts. They have about 45 days to go till expiration. So again, it doesn't matter what you choose. It's really, kind of all about structure in this video. For call credit spreads, we're going to be dealing with mainly the left side of your option pricing table or your option chain. And so this is where all the calls are housed. This should be the same for most brokers, no matter who you're on, whether it's thinkorswim or not. And so with a call credit spread, you have to remember what we're doing is we are selling a call option above the market and then buying a call option a little bit further out to create a defined risk position. So in this case, we might sell the 241 call options. Again, SPY is trading around 236, 237 right now. So we might sell the 241 call options, and then we might go ahead and buy any options beyond that, maybe the 242s, the 243s, the 244s, etc. Right? So that's a judgment call based on your account size and potential risk that you want to take on the trade, how much credit you want to receive, etc. Right? So all you have to do actually to set up this trade is you just want to go to the short strike that you're going to be targeting first. So this is mainly where you start setting up your probabilities. You start targeting, how high of a probability of success do I want on this trade? In this case, these 241 calls have about a 30% chance of being in the money. So they've got about a 70% chance of being out of the money or successful at expiration. So all we're going to do is we're just going to simply right click on that. This is the first way to do it. You go down to the sell column and then you go back up to vertical. And all vertical is just the definition inside of thinkorswim for two different contracts and a combination of buying and selling. And so we can use vertical, as you'll see in a lot of these videos, to create different payoff scenarios. So once I click vertical, this order dialog box is going to come up. Again, so you can see what we're doing here. We are selling the 241 calls and then buying the 242 calls, which are right above it. So you can see these quantities in here. It also tells you on the side, right, which side it is, a buy or a sell, etc. Now, the reason that you know that it's a credit spread is because you're taking in a net credit. So the difference between selling the 241s and buying the 242s is still a net credit, still an option selling order in your account of $34 per spread, right? And then you can use all of the different order type functions that we've covered previously. Once you hit confirm and send, then that's where you can actually see the order. You can see how much you're going to make, how much you're going to lose, the break-even points, etc., etc. Now, of course, from here, you can choose to widen out your spread. Let's say you wanted to do, instead of a $1 wide spread, which is what this is, you want to do a $2 wide spread. Well, you can simply make that change right here, and the pricing will be reflected right here in the order dialog box. So you can see a change from 30-something cents in credit to a $62 credit for this position, right? And so we can just keep going out and adjusting this trade to fit our profile, what we want. Now, of course, the more that you go out in potential credit, or the wider you make the spread, the bigger your potential loss is going to be, right? So you just want to make sure that you're really taking into account, your position size and doing this appropriately. So that's really as simple as it is to enter a spread. Another way to do it, just in case you want a little hack or trick, is you can hold down the control key on either a Mac or a PC, and you can manually click on the bid and ask spreads. So in this case, I could hold down the control key, and you can see, you can notice the numbers pop up when I hold down the control key. But once you do this, you can hold down the control key, click on the bid price for the 241 options. That will bring up the dialog box to sell those. Again, you hold down control and then you manually click the ask price for the 242 options, and then you can see it adds it in here. and it then tags it as a vertical spread. So it knows, the system knows that that's going to be a vertical spread, right? So that's a great way to just do it with hotkeys. That's what I like to do. I just like to hold down the control key and then just manually select what strike prices I want to use. So as always, hopefully you guys enjoy this video. If you have any comments or feedback, please ask them in the comment section right below. If you love this video, thought it was helpful, please consider sharing it online. Help us spread the word about what we're trying to do here at Option Alpha. And until next time, happy trading.